Hello and welcome back to the Sovrenfx YouTube channel. Hope you're having a great day. Hope your trading is going well. So today I want to talk about the secrets of support and resistance, supply and demand, whichever you want to talk about. So that was my first point. Let me clear the air first. Support and resistance is simply same as supply and demand. According to me personally, they might have different dictionary definitions, or maybe people use them for different reasons, but according to me and how I trade, support and resistance, supply and demand are basically the same thing. Okay, so with that out of the way, let's begin. Okay, so support and resistance is not one particular price but a range of prices. That's why when I draw my support and resistance, I don't use lines first. I draw a box because it's an average of these prices. Then I'll have a line in the middle. Simple. So that's my resistance. Then you can have your support. Here's how I draw mine. There. So that's just support and resistance. Basic cookie cutter drawings, like they're so simple. You don't have to go through all the trouble of finding even numbers, dot 500, dot 00. I mean, you can just use your eyes. What I say. In fact, this is a very good example. So this is what I'd do. Let me remove the drawings. So when you look at this, you look at an area where price hasn't closed before, and I believe everyone's using candlesticks, the classic candles, not Holo, not Renko, Haikenashi. Just use the classic candles. They are much simpler and easier to read. So you look for the price where where candles haven't closed below before. So like this is an average of all this, such that when you draw a line there, you have your support, or you could call it your demand zone, whatever, they're interchangeable. So what I do here, if I was to take a trade around here, I'd wait for price to close below this, have my entry at the break of the previous candle low, then my stop loss would be somewhere in the middle around here. But mind you, this is the 1 hour chart, that's why the stops are at 28 pips. Then I like to go for a 1 to 3, 1 to 2, lowest 1 to 1. But anything below that, it's not worth it. Don't take the trade. Okay, so that done, let's look at resistance or your supply zones. So when, let's say you're here, then you're looking for your resistance. You look at the average of all this, where was price unable to close above, and according to me, this is where I'd place it. Price wasn't able to close above here, then have your line strike through an average of the zone. Okay, so very simple. So this is how you'd enter a closure above the resistance, and I'm giving you all these tips for free. This is how I enter. So once it closes above, I don't enter immediately. I wait for price to make a bottom wick. Then as it comes, I enter on the flip of the candle or the break of the previous high. So technically here I'd enter on the flip of this and have my target at around here. This is the next point of interest. Stop loss at have it below the previous candle around there. Then this would be where I'd take my first take profit, take maybe 80% of the table, leave 20% running for our next target. So this would be our second target, then finally our third target. But I like to take a majority, a huge chunk of my trades at the 1 to 2, 1 to 1 risk to reward ratio, and that's how I've been able to trade profitably. Okay, something else you wanna look at is where you're drawing Okay, not where, but at what time frame you're drawing your zones. So as you can see, let me use this as an example. This 1 day being the strongest and 1 second being the weakest. Price tends to respect levels at a higher time frame when drawing your support and resistance compared to a lower time frame. So the sweet spot is at the 1 hour and the 30 minutes. Here is where I take most of my trades because I am a scalper / day trader. But I mostly scalp because I trade gold and price moves fast. I can get in a trade 1 minute, hit take profit at 50 pips, I'm out of the trade and done for the day. Also, another rule of thumb is to take only 1 or 2 trades a day. That will, like, psychologically, human beings are known to make 1 or 2 rational decisions per time. So once you make more than 2 trades, your third trade won't be as rational as you think. You'll be thinking of either you'll be greedy or more fearful. Because by your third trade, if you've won 2, then that's greed. If you've lost 2, then you're taking it out of fear, maybe because you're almost losing your account and you want to recover. So as a rule of thumb, I take 1 or 2 trades a day. If I wake up, take a loss, I can take the day off, maybe understand why price moved that way and don't repeat the same mistake the next day. But if you take lots of trade, you can't remember what you took before and maybe your reactions after. Having 1 or 2 trades at the end of the week while you're doing your review, your market review. Also, another rule of thumb is to do market reviews on a daily and weekly, so you can look at your mistakes and where you would have done better. So yeah, enough of that. Let's get right back into the video. And as I've told you in other videos, I trade using ranges, and this would be my range 1, this would be my range 2. Yeah, I think that's pretty much it. If you have a question, you could ask in the comment section below. You could also join the free Telegram. I give out free analysis and free fundamental analysis. If you wanna learn fundamental analysis, you don't have to pay anyone. You could just read books on macroeconomics. And one site I'd like you to check is investing.com. I have the application on my phone, and it's where I get all news, prior to news, everything. That's how I do my fundamental analysis. So if, let's say, for example, you can explain this move, you can explain why price is going down. Okay, if you look at the daily, for instance, just from the outlook, you can see that price was on a downtrend. And why was that? This is because the dollar was gaining strength due to the Fed interest rate hike cycle. That's what caused this downtrend. And price is coming back up to recover. Why? Because the Fed has returned the interest rate hike to 50 basis points. That's more dovish, giving you a cushion for Christmas. This to have investors invest more during the festive season, but the rate hike cycle will be continued in 2023. Well, those are just tips. At this point, you're wondering why I'm still talking, but have a great day. Sovrenfx. See you next time.